Hi there, a very good morning and good afternoon to all of you, depending on wherever you're hearing me and watching me. This is Simply Stocks with another video. And this time, this video relates to the market, and we'll continue our discussion with whatever we discussed yesterday with respect to the market. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a portfolio advisor, and that I'm not an official member of the NSE or the BSC. And so, any decisions with respect to buying, selling in stocks or other asset class kindly take by you can say talking to your financial advisor. And any investment into any market laden things is laden with market risk. So before I talk about the markets, a small request that kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my watch list, my portfolio, and number of podcasts with respect to market and the current situation, global economy, etc. So you can be a member there. You can check out the Patreon link in the description. So, in continuation with what I discussed yesterday, that the market is looking weak and it could fall. Let's look at the indices and let's discuss as to where it could be very prudent to get into the market. So, if you look at it from the standpoint what we have discussed, the market is behaving in a similar manner. So 22,526 was the high, and now that becomes a short-term high for me. And the thing was, it looked like that it will break 21,900, the 50, you can say the 50 DMA altogether, and that has exactly what it has panned out. So if you look at a 1 year chart, the 50 DMA is at 21,850, 865 on an exponential basis, and it has broken that, and we are at 21,830 and now moving ahead. So it is not looking good at all. And so now we need to discuss as to where we can get in, because and getting into mid and small cap stocks, because there has been a lot of correction there. Good quality mid and small cap stocks are coming at very decent levels. Even large cap stocks are now correcting and looking fine. So we need not just look at the screen and just stay put that okay, the market will keep on falling and let's wait it out. Once it bottoms out, then we'll buy. Nobody is able to do that. So today what I'm going to discuss about are the levels. I have discussed that with my Patreon members earlier in the morning, and so I'm discussing with you all as well. I'm completely into cash and I'm looking to deploy cash into the market. And so, what are the levels that I will look at? So, currently the market is at 21,850. Now, if you look at the 200 DMA, if I just plot the 200 DMA in here, then we'll understand that on the Nifty front, the 200 DMA lies at around, so let me just take that out. If I can just pick one daily moving average, that's 200. Or let's just check it on money control. We'll be able to do that as well. So that will be quicker in that sense. So if I open that up and search for the Nifty levels, or 200 DMA is somewhere around 20,400. So I just want to show you that, so that you have an understanding. And I have an interesting way of buying into mid and small cap by looking at the large cap indices. So if I open up Nifty 50 on the money control site, it's at 21,850, broken the 50 DMA, bearish in that sense. And once I open this up, then you'll have an understanding that 21,920 is the 50 DMA which has got taken out today. Next support is around 21,000, and 20,300 is your 200 DMA. Now 20,300 is what I'm looking at very closely, that the market could go to. If the market is looking for a correction, then we could be headed towards levels of 20,300 from these levels, which is a 1500 point cut, which is a 6-7% cut from here. But you cannot say that it will go to 20,300 or will it reverse from 21,000 or what will happen. But what we surely know is that the market is not going up. So nothing is going up in a hurry. We are having very small bouts of upswing and then major selling. Today the high was 21,980 and it is making lower highs. So if you see from here on in, things got really difficult. So this was around 21st of February. It was not that in March things gotten bad. From around 20th 21st of February the market was tiring, then it showed an up move and then finally it has collapsed. So we should divide these 15-1600 points into 4-5 tranches so that we buy say 20% in each tranche. So if I say that the decline has begun from 22,000 levels, because 22,000 was being protected for the last 3-4 days. If you see here, the high was around 22,200, then it was around 22,120, then it was around 22,120 again, and today we could not reach 22,000. So we divide this between 22,000 to 20,400, that's around 1,600 points. If I say 22,000 minus 20,400, so that's 1,600 points on the Nifty. If I put in 4 levels in it, every 400 point dip, you try to put in 20%, not 25%, but at least 20% of your total capital. So at 21,600 in mid and small cap, apart from large cap, you buy some large caps, but around 21,600 even in mid cap and small cap, you buy 20% of the stocks that you have already listed. So suppose you have listed 20 stocks, you want to put in 1 lakh rupees in each of them, then you put in 20,000 in each of them at 21,600. Second level to watch out will be closer to 21,100 or so, or 21,200 ish, around that. You put in the next 20%, and around 20,800 or so, you put in 60% of your total holding. And then, as I mentioned, 20,400 is your 200 DMA. If it goes there, you put in 80%, means 20 more. So you'll put in say 20% more of your total holding, so total money. So eventually you'll be 80% invested at 200 DMA. Now why I'm saying that don't put in 100% by then is that you never know. The market could go to 20,000, the market could come back to 21,000, and then you put in the last tranche and then sit tight. So this market is not in a, you can say, in a bear phase. Many of you might think that, but as I mentioned time and again, in 2018 we faced the same kind of things, same kind of consequences. So this is a all-time chart of the Nifty, and if I look at 2018, so let's go closer. So this is 2017 December and all, and in fact in the mid and small cap it's more pronounced, the kind of fall and everything that happened. So from here on in January we were at around 10,000, say 11,200, and then we had this dip. But if I look at the small cap index, then you'll have an understanding. So small cap has fallen 1%. Now why I'm saying that, what you need to do is buy into small and mid cap by looking at the Nifty, is because you never know, small and mid cap might not fall that much after the kind of carnage they have seen over the last 15-20 days, but at the same time they are falling, so they are down. So we have the small cap index down 1%, whereas the Nifty is also down 1%. So it's not that it is underperforming big time. That is exactly why I'm saying that look at the Nifty levels and start putting in money from 21,600 kind of levels, and according to your risk appetite keep on increasing your funds till 20,400 or even below that, and probably market should bottom out there. Now what I wanted to tell you is that in 2018, let's go back to December of 2017, and at that point of time the market in December of 2017, the small cap index made a high of 19,260, and then it made a high of 20,200, nearly that, in January, I think 4th or 5th of January and all. And then the big fall happened. So from around 20,200, the crash happened, or the fall. Although let's take this out, the pandemic fall, let's not talk about that, because that's a black swan kind of an event. But till July or June, we had fallen sharply. So in July we made a bottom at around 12,500. So from 20,200 to 12,500 was the kind of fall that I'm talking about. And that's around 38% on the small cap index. Currently we are down around 15% on the small cap index. So we could go down, and we could go down big time over the next month and a half. But keep an eye on the Nifty, because if the Nifty reverses, there's a high chance small caps and mid caps should reverse. The reason for that are the earnings. In 2018, earnings were not coming in. In fact, Nifty earnings were around very less, and the growth was around 3.8, 3.9%. Whereas today the growth is pretty robust. In fact, in the small and mid caps, the growth is even bigger, with 30-40% in some of the stocks continuously. So that is why I believe that we might not see a 35-40% fall on the small cap index from the top. You need to just make this investment, or say even short term trading, very simple, that you buy looking at the Nifty into large, mid and small cap once these levels achieve. So once these levels come by. But I see this market, I see Nifty going down over the next 3 weeks further. And if it closes below 21,860 or so, let me just show you on a 1 year chart as to what the 50 DMA is. So again, it is around 21,865. So if it closes below 21,860, it's very close to there. Then we are headed much lower, at least 1,000-1,500 point lower on the Nifty, and that will give us very good opportunity. I cannot talk about stocks here, but you need to just put out those companies which are producing very strong numbers and yet have corrected, where promoters have bought at higher levels and yet the stocks have corrected, where there has been QIP and the stocks are good at very high levels but the stocks have corrected. Look at those companies, especially look at very good quality mid cap companies, and then look at some small caps if you have a lower risk appetite, and you will end up doing extremely well till July. I think by July we will be much higher on the small and mid cap indices, and by end of July we could be booking profits into these trades. That's my understanding. And again, disclaimers do apply. That's all my assessment and what I think could happen. These are all conjecture, but the screen tells me that the Nifty is not looking like, or the markets are not looking like going up in the foreseeable future, in the next 1 month or so. This thing will change if the market closes above 22,250, which looks difficult, and today it is struggling to hold the 200 DMA. Especially one needs to look at this level, because on this day when the crash happened from around 22,450, the low was 21,905. So unless the market captures this very quickly today or tomorrow, 21,905, we are headed much lower. Our next support lies somewhere around 21,200 or even 21,100 levels, around 21,200, 100. So by that time, in my opinion, what I'll be doing is I might be invested something like 40-45% into the market already, around 21,000. So that's all from me. Please do like and subscribe my channel and hit the bell icon so you can get my video straight away when you get it. And do support me on Patreon as well. Thanks a lot for watching.